Good evening, all. Ira Epstein on a very interesting FOMC day, and this is Wednesday, the 14th of June, 2023, just after 6:25 p.m. Central Time. So, lots of surprises today. Number one, the dot plot. A lot of people thought, including me, everything I read, that the Fed members were going to go down on the dot plot. They didn't. They went up. They think there's more interest rate hikes needed. So on average, looks like 2. There could be more, up to even 6%. They did do a pause today, and they said to you, stop. It's almost like Diana Ross, stop in the name of love. No, stop. There is no such thing as a skip. It's a pause. And the Fed kept using our chair, pause, pause, pause. Not once did he say we're going to skip. Throw that vernacular out. He doesn't like it, and you go by what he says because he runs the show. So let's talk about what this all means. It means that inflation isn't falling fast enough for the Fed. They recognize it. But what they did, and he explained it this way, the Fed chair, we started off with 75 basis point hikes. We moved to 50s. We went from 50s to 25s. And now we're going to go from 25s to nothing happening and back to a 25. We are not moving from 25 nothing and then a cut. Not at this point in time. So the naysayers can say it all they want. Don't listen to them. They're not right. When the Fed chair says to you, it looks as though inflation has finally wobbled and labor has wobbled and coming down, that is when you want to listen to the naysayers. You don't need to listen to him now. He basically scolded them and said, that is not what's going to happen. Now, did that stop the mania in the stock market rally? Not in any manner whatsoever. And that is because of what? There was no rate hike. So again, the naysayer will say, oh, that's the last hike if you get it. And now the fact that you didn't get a hike, their mentality is, nah, the Fed's on the run. They say they want to see things. I already know that disinflation is taking place in a number of areas, and they are right. It is in a number of areas. All over Chicagoland, they've been talking. Milk prices have gone from $4.20 a gallon down to the $4 range. They also point out a year ago it was $3.50. They talk about egg prices. We were pushing $3.69. We're now just over $2.25. About even where we were a year ago. So you've had that break, but rents haven't gone down. Shelter costs make up an awful lot of the core CPI. Labor costs aren't going down. The rate of the increase in the wages has stopped going up at the pace, but not that. The counter argument, as Jeff Gunlock today was saying, yes, but look at the productivity. You have those fully employed people working less hours, you're hiring more of them, and that's not inflationary. I listened to his argument, and he thinks the opposite of what's going on. He thinks the market is in that disinflation. He gave all his reasons. He's a very bright guy. I get it. But I'll tell you, for my money, I think that you want to also just say, if the Fed's going to keep paying me, or the Treasury is going to keep paying me 5% plus on short-term money, that's where I want to be. Now, the problem will come down the road to the money market funds that keep rotating money. You want to get longer duration on that money than those funds typically get. Just remember what I'm saying, because eventually we will get to a peak on this interest rate cycle, and you got to think about it. As for the metal markets, I went through that in my other report, but this is not what you wanted. Okay, they wanted to see that the market would eventually get what? Not the Fed fighting the way that they are and saying that there's 2 more hikes. That beats it up. You'll say, but Ira, the dollar fell. Yeah, because the other banks are going to go up. Tomorrow, you have the European Central Bank. I'll give you the secret that nobody knows. They're going to raise interest rates. What's going to happen with the Bank of Japan? They're going to hold pat. Nothing big there. And next week, you're going to get the Bank of England. They're going to raise rates. Are we getting ahead of ourselves in the stock market? Absolutely. Is it a mania? Absolutely. Do some of these PE ratios make any sense? No. Okay? Is AI just going to keep running and carrying these markets just away and away and away? Well, it could. That's all I could say. It could. I don't think so. Would you want to buy Tesla after a 13-day rally? Okay, today was 14, pulled back, but not by much. The S&P just keeps running. You can't fight it. You don't fight City Hall. And you can see how it's come all the way up here. The pattern has been higher high days all the way through. It began, this was 1, 2, 3, 4 days in a row of higher high days, not taken out the other day, not an inside day. The market is lined up in a bullish configuration where the shortest term average, the 18, is over the medium term 100, and the 100 is over the longer term 200. But you're running at the Bollinger Band and you keep running into problems there. Here's my words. When the red line closes under 79 in that'd be the first sign that all this strength has run its course for the time being. It could re-embed the day after that happens, but if it doesn't, the odds will favor that the market's going to give you a correction. How deep will be the question mark. NASDAQ is the same thing. You're back up to the Bollinger Band tops. You're up there. Where would you put a stop if you get long? Tell me where you'd put one. Because the whole thing with me in learning and having owned stock firms, commodity firms, is that if you can't control your risk, you go broke. I see it over and over. The worst are the stock traders because they'll go into the market for a trade. I owned a discount stock firm, not a division. I owned a discount stock firm. And what became a trade becomes your investment. Well, when that investment keeps going, you load up, that guy's no longer a trader, and he backs away and you never hear from him again. He'll keep the stocks till he gets even, but he realizes he can't do it. Sort of like the meme guys. Remember them? They'd come out and buying GameStop. We couldn't figure out what was going on. They drove AMC up to $32, and I'm sitting there going, this can't be. It's never going to last. It's back to $4.50, $5. When you take a look at the Dow, this is the one that's probably the most vulnerable first. If you can get that number to close under 79, you're probably setting up at least a test back to the 18 and the 100-day average. Remember, you did have your bullish crossover in this market. If we take a look in it, just so you see, here is the market where the 100 is, the green is still over the red. Then you get the flip-flop. How are you going to go up and make a new high becomes the question. All right, we'll find out. But that's your support zone. That combination of those two numbers should be something of pretty good support in the market. Then you get to the Russell. Are you going to lose the embedded reading? Any reading under 79 will tell me here, just like in the Dow, be on the lookout. You've got three moving averages together. You've got the 100, the 200, and the 18-day average of closes all there, coming in between 1850 and 1843.5, okay? That is where I'm going to look to see what goes on. Would I be chasing the market? Well, chasing's not the right word. You're going to see traders buy this break, and they'll bail if you lose the embedded reading. That's my prediction. In the bond market, so the 2-10-year, remember I had said, if the Fed is actually going to go into a full pause, I don't consider what they did today a pause. Why? In the Webster Dictionary, it is a pause, but not according to the Fed. What Mr. Powell said, and I don't agree with him at all, but this is what he said. They went from 75 to 50, from 50 to 25, and now they're going into a pattern of maybe we look C and then we go up another 25, maybe we look C, then we go up another 25. So what he's acknowledging is the Fed is getting close to the end of the rate hike cycle. Where that exactly is, he's not certain. He's not good enough to call that. Nobody is, and he made that clear, and he was very right. But where I think he was wrong, very wrong, was why stop. I don't agree with what he did. You don't stop until, think of a boxing match. You beat your other guy silly. He can barely stand. He makes it into the corner, and he doesn't retire. If he comes out, you don't give him a round where you take off and let him regroup and charge his battery. You go in and you pulverize him. You want the fight to end. Well, the Fed put the guy close in the back. He by the way, wasn't pulverized. And now they're pausing. He's just going to get strong again. So what do they think is going to see that they're not seeing? They must be thinking, and that's why I'm stopping here on interest rates, that we're at a point where, maybe, just maybe, the traction to the downside's grabbing. I'm not seeing it on anything core, so I don't know what they're seeing, and that's why I think they're wrong. I think that you had nothing to lose by going another quarter point, see what the next set of reports are for July, and then make that decision. I think at a minimum, this one should have been the hike, and maybe the July, if they were determined to do that, that was the opening. I think their timing's wrong. All you did in the 5-year note come here, but now if they're going to keep raising rates, you don't want to be long that in any manner. This is the market that's going to see the Fed power. It's the 10-year that won't. So unfortunately, if they were going to go into a full pause, I said you got to start seeing how they're going to flip-flop that 85 number that we have the 210s at. So you've inverted by 85 points. I don't see it with what the Fed said today. In the dollar index, I get why the market stopped here. Number one, you're oversold. Number two, you're down to the support of the 100-day and the lower Bollinger Band. The trend is down. I think good rallies are going to get sold by the pros. And I think they'll lean on the downside because we're no longer in hike. They're in hike in the European Central Bank, probably the Bank of England still. The banks that came off of pausing, now Bank of Canada and Australia, they got to see the data. I seriously doubt that they went from a pause to a hike, and they'll go to a pause again only if the data weakens on them pretty good. If the data does what I suspect it's doing and it's still stubborn, I hope they're smart enough to don't let that fighter out of the corner without putting them down, and so you don't have to go another round with them. You keep doing that. In the eurocurrency, you're up at key resistance. Now, we have the report tomorrow. It's widely expected that they're going to go with their 25 basis point hikes. We have to see how hawkish we hear from Ms. Lagarde. That's going to be very important, but I think she'll be a true hawk. And I think she's determined to beat this down. I think she's an excellent central banker. Mr. Bailey was talking just yesterday and the day before, and he was saying, you got all kinds of inflation pressures, wage pressures. They have to do something to slow this down. That's going to be number one for them. Bitcoin's trying to break out to the downside. It's not a full package yet. The market hasn't done it. It is oversold. But this market has tossed in the towel for the time being. Where will the crypto guys come back in? I don't know. But they're not showing up the way they used to on these breaks. I think you'd agree with that. Then we get to the Brent WTI. So as you can see, the rally from the Bollinger Band ran out of steam right here, still very much in a downtrend. Wouldn't surprise me if you make a run down here before it's all said and done. On this pattern, you'd have to get all the way back over that high to negate under the current pattern, the downtrend. In the crude, our crude, WTI, you're back to $68.50. You're very oversold. I do hope the Biden administration is bright enough to do something right in the energy policy and start buying some of this oil that we so desperately should put back into the SPR. He made a great trade. It was sold out up here, $80, $90. Now he can buy oil back for that. It's not about buying it cheap. It's about buying it back, put it back where it belongs. It's rainy day goods. In gasoline, now, as I told you, I am looking for an improvement for July 4th, but the chart pattern's not there yet. We have a higher high, lower low. You have three key moving averages here. You keep testing them. The 200, the 100, and the 18-day average. Momentum is flat. Just not a pattern yet that I see that you can trade. I was looking for nat gas, as you know, when it lost the embedded reading to get back to the 18-day average. Ta-da. It did it. Now the market needs a story. What's the story? Let me think about it. Oh, hot weather. If we can get a string of hot weather going across the country, not Texas, Please understand. Texas is going to bake. This is the time of year where it is. Their energy commission has already said they expect their grid is going to be tested like never before. It's the rest of the country that you got to watch, all right? They normally get that pattern right now. It's like saying, hey, I'm going to go to Arizona in the summer. Sure, you like 105 degrees? Try to walk on that barefoot on a street. Wait till you see what happens. I went to college there, so it's one of the colleges. It's definitely very, very hot. Well, one of the patterns that you're getting a lot of right now, I don't use the word later, I mean right now, happens to be the outside days. And they're really helping me call the trades for my clients, because normally it's a continuation pattern. But if you have an outside day down and within X period of time you take out the high of that day, it's often a sign that the market has changed on you. How many days? Where's the market going to go? I discuss it in 9 video chapters, give you all the setups for it. I give you examples in stocks, futures, and ETFs. So it's all of them. You're going to get a 14-day trial to my complete futures research, by the way, and I'll throw in the ETF. How do you get all this? Because it's pretty simple. All you need to do is you go to our website under free offers. Right here, you move your cursor to the top. There'll be icons that show. Give it a click. It's inexpensive. I think your 9 chapters, got a Saturday afternoon, you'll master the course. I'm Ira Epstein. You have yourselves a great day. I will talk to you tomorrow.